Hey traders, welcome to Charts and Huge Mugs of Coffee. So I just made a fresh mug, having some Holler Mountain from the good folks at Stumptown. We need a coffee sponsor for Charts and Coffee, for crying out loud. All right, so working on that. I'm working on that. All right, gang, great to see everybody. Happy Wednesday. Thank you as always for being here for Charts and Coffee. This is probably one of the most fun things I do every morning. I love this. This is so great. We get to talk about just all sorts of topics before we get into the trading room, before we get into the trading day. What is on tap for today's trading day? Take a look. Wednesday. We've got a lot going on, gang. We've already seen the PPI result, 0.4 PPI. We're going to talk about this really briefly here this morning because a lot of folks are asking, Rog, is good news bad news? Is bad news bad news? Is good news good? Where the heck are we in terms of that understanding of what different data releases mean to the markets? So I'll talk about that here this morning. A tick up, however, for those of you that have been playing along at home, you know that a tick up is going to do what? It's going to sell the market off. So this is one of really a two-parter today. We have FOMC meeting minutes coming up at 2 p.m., which is just sort of the notes. They used to be a little bit more a reflection of dissension, disagreement, or agreement. And now they're a well-coiffed release of what the Federal Reserve would like us to take away from the previous meeting. So in a lot of ways, it's designed to sort of be a continuation of whatever the message was supposed to be from the press conference. So not as big a needle mover as back in the day when we would have quite vocal dissenters on the voting member committee. All right, that brings us to tomorrow. So if you thought today's volatility was pretty bananas, wait till we get CPI. Some of you still might remember and still might have some nightmares about the September 13 release of the CPI. Tomorrow's the big number this week, gang. That is the big release. And if the markets brace themselves for, oh gosh, we're still ticking up on CPI, what is the end result of that? Higher target rate probabilities. That's the punchline, okay? And that's where we are right now. So let's go take a look at our layout. For those of you unfamiliar with my layout, it always comes in threes. And you're going to have a 5-minute chart on your far left, daily chart in the center, weekly chart on the far right. This view allows me to day trade. I make the 5-minute chart prominent, daily time frames just right next to it, quite literally right next to it. And then the weekly, I'll shove off to the right side. When I start swing trading, I can move the 5-minute out of the way. Daily is prominent, and weekly has a little sliver of a footprint, so I can see the overall weekly trend. When I start position trading, the daily gets smaller and the weekly gets bigger. So this is a very adaptable layout. I don't really need to change anything, and I can see everything that I need to see about different time frames and time horizons right at a glance. So that's why we work this 5 daily and weekly layout. Here is your PPI reaction. That's the reaction of what? Inflation is higher. Now, not by way of PCE or CPI, but the end price of goods and services from producers, that's in that inflation column, right? And that's why we would call it a significant macroeconomic mover, which clearly it is. All right, so next up is what's going on with bonds. We do want to take a look at yields here quickly. And if bonds continue to move lower, if they do, that tells us that yields are moving higher. Remember, the direction of bonds and the direction of the yield are inverse. So lower ZB, lower TLT is higher yields. Interestingly enough, bonds are recovering already. Set your watches. It should, if it persists, help equities move higher. I've received a lot of questions about VIX. What's the VIX saying about where we are? Gang, take a look on the daily time frame. See all those purple lines? These are all the automated Darvis levels that we've been watching. Do you think the VIX has a sort of predictable upper and lower range? It sure does. Look at where we're heading into. These purple and yellow lines are previous Darvas levels. This is a very common pattern. We see resistance at the very top of that range. We see support at the very bottom of that range. We don't have to be arbitrary in any way about it. We don't have to be subjective in any way about it. Let the indicator do the heavy lifting. The indicator has no bias. It has no preference. It doesn't care if I'm long and short. It only knows if the pattern has justified marking that level as support or resistance. You can see what we're wandering up into. What does this mean for equities? At the top of the range, we've sort of seen peak panic, which is usually weakness. And we should, based on the VIX, and I would not just trade based on what the VIX says alone, but it's definitely an influence. Based on the VIX, this would mean that panic should be subsiding, which means if we're going to find a bottom, PPI, CPI combination will ultimately be the determining factor. But it's very interesting that we're testing lows in the broader averages again, testing the highs in the VIX as we go into arguably the most important data release we're going to have, maybe even more important than the FOMC event, the most important data release we're going to have this month. What is inflation telling us by way of CPI? All right, so with that being said, big sip of coffee. Let's kick it off with our very first question. And all right. Hey there, Prince. How are you? The V-score, my beloved indicator. The V-score is a tool designed to show the behavior of price with respect to its VWAP. Yeah, I think you're taking that from the site. Yeah. Respect to its VWAP on a non-dimensional linear scale. Is that from the site? Non-dimensional linear. That doesn't sound like Raghee speak. However, can I elaborate on this? I don't quite understand. I don't know that I would explain it that way unless I was feeling sort of hoity-toity that morning, which is entirely possible. What is the V-score? V-score, imagine we know, and I think we all believe this, right? Because we talk about it a lot here at Simpler. The overall movement in price and volume would be included. And for that matter, so would volatility. We have a range, and within that range, we have an average. That average is also known as the mean. What is this sort of, we kind of come back to the mean. I imagine it as a bungee jump, which, yes, I've bungee jumped before. And you jump off the platform and you sort of stretch the bungee, then you spring back up. You don't spring back up to the platform. You spring back up to some sort of average based on the height of the jump, the stretchiness of the bungee, my weight, right? So all those things get factored into how much I spring back up. I should have really called it the bungee cord. That would have been a far better. It's the volume bungee. Lorna Bott, we're renaming it. I'm kidding. She's going to kill me. But it's a bungee cord. When we wander too far from sort of the mean, the normal, the average, the V-score is going to say, yeah, we've gone too far. And gone too far also suggests that we're going to reach a point at which size is going to come in. Now, remember, this isn't retail, gang. Remember when I built this? I built this out of desperation, fear, same fear and desperation a lot of you probably had in 08, which is, oh my gosh. And I made the mistake I'll never make again in 08, which is I closed out 3 of my 5 portfolios. Dumbest thing I ever did. However, I did it. And I needed to rebuild the, I'm trying to open this darn weekly chart up. Bear with me here. I don't know if something's wrong with my mouse or just something's wrong with me. Probably the user, right? All right. So I looked at the weekly and said, I need to know when size is coming back in. And size is a volume conversation, right? And as I've mentioned before, we are never right. We're never profitable in a trade because we were the only ones that saw it. We might have been early. We might have even been a little late, but we were with the crowd somehow or other. No surfer paddles out to flat oceans and rides a wave back in. We do need the wave to do a certain amount of work. And the same thing in this analogy is volume. We are never going to be correct. We're never going to be right. We're never going to be paid because we were the only ones that thought this was the entry and now it's going to follow through. Follow through needs the crowd. And the crowd is another way of saying volume, and that's what it measures. Is the volume likely to come in because we've just wandered so far away from the mean? That's what I decided to do back in 08. How do I know? And we just wandered too far away. And it worked in 09. I designed it in 08. I rebuilt my portfolio in 09 because the V-score said, yep, this is that bungee cord moment. This worked in 2020 with COVID. We had a low in 2019 with the Q4 rate hike. And so that's what it measures. That's what it measures. And we have yet to be at those volume extended bungee cord levels. We're still hanging out by the mean. We're still hanging out by very, very docile levels by way of what we've seen since, call it summer of 2020. And that's it. And I'll definitely spend some more time talking about it. I saw some excellent questions from yesterday's free video. So if you haven't checked it out, I outlined 2 trades from yesterday's trading session. And one was an intraday and one was an end of day. And it was called price versus volume edge. And what was interesting about this is that it was the volume that gave us the insight to get in. In fact, how many of you saw yesterday's afternoon sell-off? I have no idea what caused that. There was a lot of news bites that came out. Who knows? Don't care. What happened is I saw volume and Matt, I don't know if you're here in the room. Matt was in the mastery. Matt said, Rag, here's a signal. And he grabbed that buy and we did that together in the room. It was a volume derived buy. It wasn't a price level buy. And then there was a number of great questions. So for those of you that asked some questions here, I am going to dive into that because it really helps me to know where the disconnect is. So to those folks who left questions, I will get back to you. And Prince, thank you for the question. I do absolutely appreciate it. Check out yesterday's video, price versus volume edge. All right. So moving on to the next question, which is, hey there, Trader Momo. Sold the rip for 22, bought the dip for 08. Okay, cool. Very cool. Let's see what we have here. Let's open this chart back up to the intraday. You know, the 830 hot zones, if we go in with our eyes open to risk, the 830 hot zones are actually pretty tradable as long as we understand volatility parameters. Notice how wide the HPMRs, hourly price movement range boxes here, these rectangles, these zones are compared to 7 to 8. There's a reason, because when you go back historically and you look at the 8 to 9 o'clock hour and you see all the 830 hot zones that will happen over the course of 6 months, that volatility is significantly wider. And you can see that reflected in the zones. I don't think it's necessarily a time where I would recommend most traders to venture into the market, but there definitely is some benefit to knowing that there is opportunity for futures traders there as long as you can manage that risk. All right, Sam K, what is my perspective on reading the tape or using additional confirmation tools such as Bookmap? Oh, okay. So Sam, tape reading, it is an art that requires a lot of practice. So tape reading, for those of you that don't know, is just what was the last trade? Forget bid, forget ask. Where was the deal done? That is known as the last. And that is reading the tape. So where are trades being done? And some traders say, look, that's all you need. And good for them. I love when traders, look, my favorite comment on any one of my videos is you have too many things in your chart. Okay, that's fine, right? Or that all you need is a naked chart. Okay, that's fine. I think that a lot of traders say all you need is the last. And okay, that's fine. I think there's more information that we can glean from not being quite the minimalist. I'm more a fan of essential than I am minimal. There's a very big difference. And so what's essential, Sam, is having a tape reading approach essential? Probably not. Probably not. Although it's important. Now, I will say tape reading, understanding where the last is absolutely essential to order entry. At the moment that I'm trying to enter an order, especially if I'm bidding on something or offering it out, knowing where the last is going off between the bid and ask is very helpful. At that moment in time, it's pretty darn essential. Bookmap, is it essential? Depends on where you prioritize order flow in your trading. I think for a longer term time frame trader, 1 hour plus, it probably isn't as big a deal. For shorter term time frames, would I call it essential? Again, it depends on where you prioritize volume and how you want to do it. I like the tool. Frankly, I've done quite a few webinars with them. I'm a big fan of the tool. I have it. I don't pull it up all the time, but it is something that I have used from time to time. And I find that if that increases in its importance, like, look, could I have it up all the time? Probably. But the feed that you put into Bookmap does matter. So you just can't put any old feed in it. Getting the feed from, who do they use? Bar chart. Bar chart is really good. Bar chart's been around forever. And when I did use Bookmap much more consistently, I made sure I fed it with bar chart data, which is really excellent. And actually today at 7 p.m., I'm doing a Twitter Spaces with some of my old Stock Twits friends from, gosh, many, many, many years back. And we're going to be doing a Twitter Spaces. I think it's being sponsored by Bar Chart, maybe, at 7 p.m. So if you don't follow me on Twitter already, feel free to go check out whatever it is I'm talking about that day. And then we're going to have this Twitter Spaces happening tonight at 7 Eastern. So pretty stoked about that. All right. Mark says coffee sponsor sounds good. Yeah, what the heck? Yeah, we need a coffee sponsor. Absolutely. Yeah, I'm talking to you, Stumptown and Death Wish. That's what I drink the most. All right. Next up is, hey there, editor. How are you? I hear you loud and clear about staying out of CHOP. I took a bit of a loss yesterday with the SPX. Hey, editor, thank you for mentioning SPX, and thank you for admitting CHOP is hard. It is. Not because CHOP is impossible to trade, but the amount of patience you need in CHOP is far more than the amount of patience you need in an uptrend. Let me explain. In an uptrend, you can buy the dip, you can buy the rip, and oftentimes you can even get away with buying a new high. 3 ways into an overall uptrending market. In CHOP, there's really only one thing you can do. Find the upper and lower edge, because your edge is at the edge. Your advantage is at the edge. And then measure how you define the edge. Maybe it's Darvis. Maybe it's a slow stow. Maybe it's the V score. Those are my 3 ways and then you got to wait and wait. And that, I believe, is what makes it so difficult, because us humans, for whatever reason, we don't like to wait. I'm just as guilty as anybody else. And I think that CHOP is probably the most difficult because we tend to misidentify. Is that a word? We tend to misidentify CHOP versus trend. Oftentimes we try to buy the dip in CHOP, which is not necessarily accurate. And we don't have any way to identify and then confirm what those upper and lower edges are, which is where Darvis and heck, HPMRs do that as well intraday. So SPX is a beast. We've talked a lot about SPX. Why is it such a beast, Rob? Why is it so different than SPY? Aren't they measuring the same thing? Yes. However, remember, SPY is a US or an American style option with all its unique expiration action. And SPX is a European style option where you can only exercise the option on the day of expiration, which makes the volatility so much greater. And that's what makes that one a wilder ride. All right. So yeah, CHOP is difficult. I don't think because we can't identify it, but because it's so difficult to just wait. All right. Marla asks, am I still not at all bearish? No, I'm really not. So in other words, make sure I'm understanding your question right, Marla. I'm probably one of the few folks who isn't saying the sky is falling. And I think a lot of traders and folks think that means I'm bullish. Gang, remember, there's 4 things we can look at in the market to do. Trend up, trend down, move in a narrow sideways market, move in a wide sideways market. This is a fairly fresh downtrend. This is true. I do not have significant volume levels being broken. I think we kind of discussed that briefly already. So if I'm looking at size saying that this break is a significant break, that as we took out the June 2022 lows, sentiment and size just absolutely pointed lower, the exact opposite happened. And, there was a video that I cut for my mastery members and futures members yesterday. And I said, look, this does not take a far stretch of the imagination for other traders, to say there's going to be a lot of sell stops just below that low. I mean, that's just known. It's a given. There's going to be a bunch of sell stops once we breach the support of that level. But if that breached isn't accompanied by size, and again, there's lots of ways, gang. There's no one way to do anything I'm talking about. The only thing any of us can do is just say, this is what I do, right? This is what works for me. This is what I have years, if not decades of testing on. And therefore, this is what I rely on, right? Unless I'm breaking down through significant volume derived support levels, price-based volume, then this is not a breakdown. Remember, we cannot be alone in our trade. We cannot expect an entry that we take to never have more participation in our get follow through, because remember, a short is I've sold here, someone shorts at a lower level, someone else shorts at a lower level, someone else shorts at a lower level, and onward we go. Unless that next step happens, I'm alone in my trade, as many traders I am sure were on that break, and we had a rip higher. It did not help that there was a high degree of Fed pivot expectation with that rip higher, but here we are right back down to those lows. Do you think there is a whole mess of sell stop orders basically waiting below the 35.71 3/4 low? Absolutely. If that low accompanies a break in my measurement of this the -2 standard deviation of my V-score. In other words, we're breaking volume support. That's the easiest way to look at it. We're breaking that size attention support. Unless we do that, this will probably happen again, right? What's really interesting is right now we have a peaky VIX and sort of valley in the and support in the equities. I'm not saying we're up and away from here, but I have a very hard time wanting to short in the hole. So if am I bearish? I'm just not that bearish. I'm not going to call for significant lower lows. Gang, we all click on that stuff. That's why they call it clickbait. I could easily hearken back to every calamitous time in the markets. I've traded through many of them since '89. However, that's just not what I see, right? So I can give you information, or I can put something out there to grab your attention and not then, panic you all to say, hey, got to click on this. I try not to do that. I try to be as even keel. And here's a cool thing. If our opinion, it needs to be updated, I don't need to have a fixed opinion. That's ego, right? If I have a fixed opinion, this is bullish. Remember, now I put that out there to all of you. It's going to be tough for me to walk that back. All I'm saying is day trade right now. I think one thing that you're going to find, and I know my members are finding that. I know that many of you here at Simpler are doing that. Just day trade. Do I think we're going to see lower lows? No. I also don't think we're going to 4,300 in the next month either. So what does it make sense to do? Just stay with the short term. And I know I didn't get through as many questions as I wanted to, but I know I'm running way over. But really great questions to kick off the morning. And I just know that if we're panicked and fearful, we're not going to make great decisions. All right. And so thank you for the question on volume. It's actually all wrapping up into what we're dealing with right now. Marla, thank you for the question on, am I not at all bearish? I'm just not going to call for significantly lower lows because I still don't see it on my charts. Is it weak? No doubt. No doubt. CPI tomorrow is probably going to have a big impact on whether we break 3,600 or not. All right. So gang, thanks for, as always, the question. Thanks for being here. Sorry I ran over, and I will see you. If you have any questions, though, feel free to leave them down in the comments. Thanks, as always, for smashing that like button. And thank you, as always, for being my caffeinate and dominate crew. I appreciate each and every one of you. I'll talk with you tomorrow. Be good to each other.